All right, so what is President Trump doing? What are his goals right now? Because they don't seem to be helping the market as much as certainly I would like. And to tell you the truth, the tariffs are putting markets at risk. No one likes a skittish market. Nobody likes surprises. It is very clear that President Trump wants mortgage rates to come down, but his actions are creating a rising rate environment. Let's talk cars. If auto prices go up, which they will, that is inflationary. The price of cars factors into our inflation reading. Falling energy prices, and they have been falling, but they're not going to go down much farther because the energy companies, they're not going to let the price of fuel, gas, oil go down much more. Those decreases in fuel prices are not going to offset the increase in auto prices. And additionally, the energy prices, they do not factor into the core inflation readings, which is what the Fed is using as their measure. That's what they want at 2%. Food and energy are not factored into that. And so what will happen with auto loans, as demand drops over time, with car prices going up, we're going to drive those beaters around for a little longer because we can't afford, the average Joes and Janes can't afford to buy new cars, and demand will drop over time. What we'll see then is the economy begins to slow, and we already see signs of that. You got the conference board readings that are pointing to a recession right now. And as the economy slows, then we will go into recession. And as we go into recession, then you'll see interest rates start to come down. And the president has said repeatedly to expect some tough times before we get better. But my question is, will he have the patience to endure these tough times? That's a big question, and I think we all kind of have our own idea of what that answer is. Let's talk about the struggle bus. The Janes and Joes are on the struggle bus. We're already seeing maxed out credit cards. You're starting to see auto payments being delinquent. Well, guess what we're going to see next? Student loans. All right, there were 9.7 million borrowers who were overdue in this last year at the end of 2024. That's $250 billion in delinquent school loan debt. All right, the days of no impact on not paying your school loans are gone. All right, and what's going to happen to all these people, these 9.7 million borrowers who have student loans? You're going to see their credit scores go down, and your credit score is your financial report card. So that is going to certainly have a negative impact on the economy, certainly on individuals who have those delinquent student loans. So some tough times coming ahead, I believe, certainly for our market and for really the regular Janes and Joes who are just trying to make ends meet. So now let's get into the big three. I talk about it every week: prices, inventory, and rates. Well, prices are still going up. We'll talk about that. Inventory is up. And then we also have rates. And rates actually, thanks to Friday, rates were actually kind of flat for the week. So let's get into that here in just a second. All right, the headline news: home prices. Home prices hit 20-month highs. That's right. You would think with interest rates being near all-time highs that home prices would start going down. Nope. For 20 months in a row now, we have home prices go up. New and pending home sales show some challenges in the days ahead or in the months ahead. And then we look at how important it is when you're talking about home sales and home equity, how important location is. All right, so I can't wait to get in all this. We'll get in this here in the next couple of minutes. All right, so we had the Case-Shiller Home Price Index come in, and this is the gold standard for home price appreciation in the U.S. And you know what? We hit an all-time high for the 20th month in a row. We are up 0.6% month over month, up 4.1% year over year. That's up from 4% year over year. And really, the bottom line here is home prices are continuing to rise really across the country. Kind of break this down by some of the states, but hey, the value of home ownership is real. We see that despite high interest rates, people are still buying homes, and home prices continue to increase. And new home sales, we had a flip. January, we saw about a 10% decrease. Well, in February, we saw signed contracts at 1.8%. 676,000 new contracts. Interesting note, though, for the first time in a while, prices were down. The median price was down 3%, down to $415,000, but still above $400,000. You look at the number of new homes for sale, right at about 500,000, so about 10,000 more than where we were at the month before. If you look, only 119,000 of those 500,000 homes were actually completed. So builders they're on that struggle bus too, getting these homes completed. Cost of labor, cost of materials, those are not going down anytime soon. Let's look at pending sales. We saw a slight increase month over month, up 2% month over month. Index, which is 0 to 100, actually was up for this last month from January, so that's good. But overall, year over year, sales are down 3.6%, and that is, I think, really in large part due to the fact that they can't afford to buy a home. People are struggling to pay their credit cards on time, their auto loans on time, their personal loans, their student loans. So you're seeing fewer homes go into escrow right now. And I know I'm seeing that locally. You're certainly seeing that across the U.S. too. Well, again, we'll break this down here in a little bit. All right, let's talk about the PCE, the Fed's favorite measure of inflation. The PCE, this is what they're looking at to get down to 2%. We are actually at 2.8% month over month, up from 2.6%. Remember, before COVID, we were down below 2%. I tell you, there's no expectation either that we will see core inflation go down over the next 3 to 6 months, simply because the numbers that we're replacing from last year were really low already. And with the expectation with tariffs and an increase in prices on goods, whether it's fuel, auto loans, you're going to see that core inflation start to go up. But the good news, though, I will tell you this, was shelter costs are a major part of the core inflation reading. They actually showed a decrease last month. So that is good news kind of moving forward. But again, the numbers that we're going to replace are low. So then the next few months may not be so good. And let's get into what I love to talk about, and that's the real estate side. Location. This chart here shows home price increases and declines across the country. And you're seeing more and more states with home price declines. You got Washington, Montana, Texas, Georgia, and South Carolina are all showing price declines. Those are the ones that are in pink and red on the chart. And you can see South Dakota, Iowa, Louisiana, and Florida, they're next. All right, they are right near 0% right now. There's a really good chance that they'll go into the negative, into the red in the next couple months. Texas and Florida are notable because they were the top destinations for people who were migrating during COVID. Everyone's moving to Texas, they're all moving to Florida, but you can see oversaturation of that market and home prices are going down there. But you will also see, though, Hawaii, Arkansas, New Jersey, and much of the Northeast, in addition to North Dakota and Wyoming, are all seeing pretty significant price increases over the course of the last year. So I love looking at these different charts. We'll get into another one here right now. So you see, despite the price increases in much of the U.S., there is a big slowdown in home sales. Median days on market. This chart is from Realtor.com. Median days on market. Montana and Vermont are both over 100 days on market, but you can see much of the Northeast and Virginia and California are below 50 days, and everywhere else is kind of in between. Actually, Hawaii is actually in the red between 75 and 100 days on market. We've heard a lot of talk with all the layoffs about Virginia housing market going down. That ain't going to happen, folks. All right, I watched the Virginia housing market pretty closely, and the inventory has been so low in this market since COVID, since the rates dropped. Even with rates going up, the inventory there is super, super low. Not seeing any real slowdown in Virginia. California, dude, nobody understands California. Let's get real, especially with everything that's going on. But days on market, there's still, California is a beautiful state. Love it there. I was just in Pebble Beach with the wife, and man, I love that area. But days on market there, due to a lack of housing, a lot of people still living there. Days on market are certainly pretty good there, less than 50 days. So let's look at inventory. Inventory is up across the country. The South and the Western states are showing the most increases. California, Maine, and Arizona are showing 40% increases across their states. In the long run, that is going to put a downward pressure on home prices there. Despite the rise in inventory across the country, you would think more inventory, more home sales. Right now, there are 3.5% fewer homes in contract than at this time in 2024. So this high rate environment, it's starting to take a toll. Economy's slowing down, starting to take a toll on buyers, and you're seeing fewer homes going to contract. I certainly am seeing that locally in Hawaii. Let's take a look at VA rates. VA rates ended the week right about where we started the week, slightly below 6.25%. And this is really good momentum as we go into the next week, which is jobs week already. I feel like we were just in a jobs week, but next week is a big week for jobs. Quite frankly, I expect to see jobs numbers come down. And if they do, expect those interest rates on VA for certain to get closer to that 6% range. So what does this all mean for buyers? Well, mortgage apps were up slightly last week. Refinances were down 5.3%. And still 70% of those refinances were cash out refinances, i.e. people were taking money out of the equity they have in their homes to pay off debt. Last time, rates got below 6%, something to remember, buyers. All right, and we're close. Last time they got below 6%, what happened? The housing market took off. So really, if you're kind of on the sidelines, I'd say let's get off the sidelines and start looking. Next week is jobs week. You want to have your pre-approval ready. You want to be able to put that offer in, because once rates come down and competition picks up, guess what's going to happen? You're going to see all the seller credits go away. You're going to start paying 5.5% that first year, or 5.875% that first year, rather than the 4.75 or even the 3.75 on a buy down that you could see. So really, now is the perfect time to be in the market to buy, especially before that PCS and the moving season comes. Sellers, you got about 2 weeks. Get your home on the market within the next 2 weeks. I think you're setting yourself up for success as we get into that moving season right at the end of the school year. And that's about all I have for you guys this week. I hope you have a great week ahead. Have an awesome weekend. Any questions at all, please don't hesitate to reach out. Don't forget to like, comment, subscribe. Love to hear from you. You guys have a great weekend. All right, aloha.